I can click on calculate, and I can see here that this risk-based DCA that I created above actually outperforms regular DCA over this period of time by over 1,300%. Have you ever wanted to perfectly time the top and bottom of the Bitcoin market so that you could maximize your profits and make way more money than your friends? Well, that's impossible, and any product or service that's promising you the ability to predict the future is lying to you. The closest thing that I think that we have to predicting the future is augmenting a dollar cost averaging strategy to slightly outperform the market over long periods of time. And the best product that I've seen so far that allows us to get close to something like that is called AlphaSquared. A few weeks ago, I showed you the best way to take profits from your Bitcoin position, and I'll leave the link to that video up in the cards and down in the description. And in that video, we slightly covered AlphaSquared, and I got a ton of questions down in the comments and over on Discord. So next, I'm going to be giving you a full review and a full step-by-step tutorial of how I used AlphaSquared and what I use it for. But first, what is AlphaSquared? AlphaSquared was created to help you get the most out of your dollar cost averaging strategy. And if you know anything about investing, you know that dollar cost averaging is the most conservative approach to investing over long periods of time. If you want to learn more about dollar cost averaging, or DCA as it's commonly referred to, you can pick up almost any nonfiction finance book. Two of my favorites are A Random Walk Down Wall Street and I Will Teach You to Be Rich by Ramit Sethi. The core problem to solve here is how can I augment my dollar cost averaging strategy to buy more when prices are low and buy less or even sell when prices are high? Or in other words, if I invest 10% of my paycheck into Bitcoin, how can I get more Bitcoin for the same amount invested? Traditional DCA has you investing the same amount all the time, and this is good because over long periods of time you get exposure to lots of different prices, but it's bad because when prices are high, you're buying the same amount as when prices are really low. It would be better to buy more when prices are low and then buy less or even sell some when prices are high. By simply taking into account something like the Fear and Greed Index or something like the MVRV data on Bitcoin, we end up with a lot more Bitcoin for the same amount of US dollars invested if we play this strategy over the last 8 years, for example. And we've actually done this analysis here on the channel that I'll have linked up in the cards and down in the description. The problem with the simple augmented DCA that we covered here on the channel is there's no guarantee that the Fear and Greed Index or the MVRV data or any single indicator performs well over a long period of time. Just because the Fear and Greed Index and MVRV data have been good predictors up until now, it doesn't mean that they will be into the future. Stuff like ETFs have radically changed the Bitcoin market, and so we're in a totally new paradigm. And this is where AlphaSquared comes in with their core offering, the risk number. This number is a proprietary blend of over 5,000 Bitcoin market data points. And if we head over to AlphaSquared's website, we can see their risk price indicator here once we log in. It's saying that today at the Bitcoin price of 65,500, the risk according to AlphaSquared is 54 out of 100. And you can see over here on the right, this risk price matrix is showing you that at different price levels, what would AlphaSquared's risk number be showing you as of today's market available data. This doesn't mean that in the future, if at some point Bitcoin hits 172,000, that the risk will always be 98. But as of today, based on all of the available data today, if Bitcoin was $172,000, AlphaSquared would quote that as a market risk of 98. So again, it's important to note that this risk price matrix changes over time based on market dynamics, and you can read more about how this risk price indicator is calculated over on AlphaSquared's website. But this approach to creating a single Bitcoin risk number solves a lot of the problems that we were talking about in the augmented DCA example. First of all, we don't have to buy the same amount every day because we have more information that can clue us into what's happening in the market. Second of all, we're no longer dependent on single data points because AlphaSquared is aggregating a bunch of different data points into this single risk indicator. And then finally, the weights to this indicator can change over time as new data becomes available in the market, whereas stuff like the Fear and Greed Index and the MVRV data, they're set values that if the Bitcoin market starts to not really trade in line with those values anymore, no one can go behind the scenes and update those values to help bring us back on track to what we think is happening overall in the market. They basically don't have the ability to learn any new information like this indicator from AlphaSquared does. But of course, this AlphaSquared approach also carries risks that we'll cover later on. So in addition to providing this risk indicator, if we go ahead and click up on the member area, we can see all of these other services that are being offered from AlphaSquared. I think the key one to point out right now is these risk notifications. We'll see here that we have the ability to set notifications for different strategies that we have on Bitcoin or on Ethereum, and then receive those notifications via email. But I think the feature that most people are going to be excited about is if we hover up here on member area and then we click down here on strategy builder. You can click on start tutorial here on the website and it will take you through step by step how this strategy builder works, but I'm just going to give you a high level example and how I personally use it. AlphaSquared knows there's no one size fits all solution for everyone's dollar cost averaging needs because everyone's personal investing strategies and needs are different. And so to fit their solution solutions specifically to your needs, they created Strategy Builder. The Strategy Builder allows you to select preset strategies like conservative, moderate, or aggressive, or create your own custom strategies based on your own personal risk tolerance. All of these buys are augmented based on your base amount. So you could say maybe you're buying $200 of Bitcoin a month, or maybe you're buying $20 of Bitcoin a day. And so if you're buying $20 of Bitcoin a day, this is saying that if the risk indicator is between 0 and 10, I'm going to buy 4 times the amount of my base amount, which in this case would be $80 of Bitcoin a day. But if the indicator is between 100 and 90, I'm going to sell 40% of my entire stack, not just 40% of this base amount. And so this conservative strategy is starting to sell between 60 and 70, and it's starting to augment your base amount to be higher and higher multiples down in the 20s and 10s. If we take a look at the moderate strategy, we'll see that it's also starting to sell between 60 and 70, but it's augmenting your base amount all the way from 40 down to 30, down to 20, down to 10, and that number keeps getting higher and higher. And you'll see that reflected over on the buying strategy and the selling strategy here on the right side of the screen. Next, you could see this as like a very aggressive strategy. You're seeing that you're buying all the way from 70s down into zeros, and you're selling larger amounts as we get above 80 and above 90. And then of course you can build your own custom strategy and save your own custom strategy. Custom up here is the thing that allows you to build a new custom strategy, and then your saved custom strategies will be down here under your strategy. This is just my sample strategy that I created. So instead of entering a base amount here, you can enter literally any value you want between all of these different bands of risk number. So here between 0 and 5, I'm buying $200. Between 5 and 10, I'm buying $80. Between 10 and 15, $160, and so on and so forth. And if you create strategies that overlap in weird ways, AlphaSquared will basically tell you, don't do that. That's not going to work. Obviously, if I had a strategy that was trying to buy something at 80 and also sell something at 80, that doesn't really make sense. The other thing to keep in mind is that on the buying strategy side, you're putting in the amount of dollars that you want to deploy directly into Bitcoin, whereas over on the selling strategy side, you're allocating a percentage amount of how much of the stack should you sell. So this 5 is not $5. This is 5% of the portfolio size. This is 10% of the portfolio size. This is 12% of the portfolio size. But over here, this 5 is $5 US, $10 US, $15 US. And so then what's really cool is if we scroll down here on the same page, we can say if I'm investing monthly or bi-weekly or weekly or daily, and there's a scenario of a bull run or a recession or a weak bull run in the future, and I specify certain starts and end dates, I can click on calculate, and I can see here that this risk-based DCA that I created above actually outperforms regular DCA over this period of time by over 1,300%. And now obviously these are ridiculously high numbers because we're starting all the way back in 2015. But to give you a better example, if you had started doing this weird custom strategy that I personally created up here, if you had started doing this in 2020, you would have outperformed regular dollar cost averaging by over 150%. So you would have invested the same $6,000 in this case. And in my custom case, I would have profited $22,000 and I'd have 0.44 Bitcoin versus the regular dumb dollar cost averaging case would have you profiting $12,000 and having only accumulated 0.29 Bitcoin. And then if you scroll down even further, you can see the historical chart of all of your buy and sell points. And this is going to be really helpful for you to sort of look at your strategy and get an overall perspective of when am I buying, when am I selling, what is the strategy doing well, what is the strategy doing poorly, and under what future scenarios, like if there's a bull run and I want to calculate this through to 2027, would my strategy perform well under a bull run? If I change it to a recession, would my strategy perform well under a recession? Or is one of those future market scenarios a big blind spot for my strategy and actually going to wipe me out? The bottom line is that combining the risk number with this strategy builder should give you all the tools you need to start understanding for your personal scenario what is the best way that you can be dollar cost averaging Bitcoin over long periods of time that's going to align with your risk preferences and your personal investing goals. And of course, as with any financial product or any trading strategy, there are risks that you need to be aware of. AlphaSquared strategies are not personalized recommendations to your financial situation. They are just data points here to give you a better picture of what's going on. You as an individual investor need to make your own informed decisions. And obviously, I have no idea what your financial situation is, and AlphaSquared has no idea what your financial situation is. And just because a strategy is appropriate for me doesn't mean a strategy is going to be appropriate for you. Particularly with the forwardcasting thing on AlphaSquared's website, it's a really cool feature to give you a high-level idea of what might happen in the future under different scenarios, but obviously AlphaSquared has no idea of what's going to happen in the market over any period of time. If Bitcoin got hacked and completely fails tomorrow, which is super unlikely, obviously none of the trading tools tools on AlphaSquared's website or dollar cost averaging into Bitcoin is going to be something that's valuable or something that you'll want to do. There are always black swan risks out there, and no model is perfect at being able to predict all of those things that could possibly happen. On top of that, the introduction of spot ETFs has meaningfully changed the market dynamics of Bitcoin. And if you want to see my opinion on the Bitcoin ETFs, I have them up in the cards and down in the description. And while AlphaSquared's indicator is more robust than something like the Fear and Greed Index, no indicator is perfect. And it reminds me of that old George Box quote: all models are wrong, some models are useful. That being said, this is how I plan on using the AlphaSquared indicator. I hate having to take manual action when it comes to my finances. I want set it and forget it automated strategies that I can check in on when I have time. And to that end, I've already automated my Bitcoin purchases using the Coinbase Advanced Trade API, and now I want to automate my Coinbase Advanced Trade API purchases using the AlphaSquared risk number. And luckily, AlphaSquared supports this using their API. Over on AlphaSquared's website, you can click on member area, and then up here at the top, you can click on API access. And once you click on API access here, you should see your API token, which is going to allow you to interact with AlphaSquared's website and get access to the risk number. Once you have the API token, you can go ahead and copy it here, and then you can run this curl command that I'll have linked down in the description. And once you go ahead and paste your API key correctly without using those curly braces, you don't need the curly braces, you can see that you're getting this JSON response saying latest risk value equals 53.9. And if we head here to the AlphaSquared website, back in user dashboard, we can see that that matches with the risk factor that's being shown here on the website. Or we can open up Cursor SH that I've done a video on in the past. It's my favorite way to interact with AI and program at the same time. You can go ahead and use this Python script that I'll also have linked down below in the blog post in the description. You can go ahead and paste your API key here into this script and then just go ahead and hit play. And if you add a little print statement here, you should see that we're getting the output of 53.9 right here, like we just got on the AlphaSquared website. And so now if you're familiar with programming and you're familiar with the Coinbase Advanced Trade API and everything that we've done here on the channel, and I'll have links to all of it up in the cards and down in the description, you should be able to see how we can easily now take this risk number, and if we head back over to Strategy Builder, we can literally build this conservative or this moderate or this aggressive or any custom strategy into the Coinbase Advanced Trade API just using the integration between the Coinbase Advanced Trade API and now this code that I wrote here in Python using the AlphaSquared risk value. And if you don't know how to program at all, I highly recommend that you check out my video that I did here on the channel on Cursor SH. It's by far the easiest way to get started with Python programming. To learn more about AlphaSquared, check out their website down in the description. AlphaSquared is completely free to use for 2 weeks. All you need to do is provide an email address. And if you're happy with the product, you can use code LEVELUP for 15% off any of the paid plans. I've got a busy couple weeks coming up, but I'm looking forward to ultimately integrating the AlphaSquared risk indicator into the Coinbase Advanced Trade API, and I'll release a full tutorial on the blog and here on YouTube when that code is ready. Go ahead and DM me on Twitter or join the Discord if you have any questions. I do still respond to all the comments. Check out this video over here to learn more about Cursor, and check out this video over here to learn more about the Coinbase API. I love you all. See you next week.